A House Denied, The Color of Homeownership. Chapter 1. The Dream Deferred. For many marginalized communities, the dream of homeownership has remained just that, a dream. The barriers preventing equitable access to housing have deep historical roots, stemming from discriminatory policies, economic disparity, and systemic racism. From the post-Civil War Reconstruction era to the present day, these barriers have evolved but never disappeared. During the 20th century, policies such as redlining and restrictive covenants explicitly excluded Black and other minority families from buying homes in desirable neighborhoods. Even after the passage of the Fair Housing Act in 1968, the effects of these policies lingered, creating cycles of poverty and limited upward mobility. Entire communities were denied access to affordable credit and housing opportunities, leading to generational economic disparities that persist today. Beyond policy, social attitudes have also played a role. The perception of desirable communities has historically been shaped by race and class, leading to segregated neighborhoods that persist to this day. Employment discrimination and wage gaps further restrict the ability of marginalized groups to save for a down payment, qualify for loans, or compete in a housing market that increasingly favors wealthier buyers. Housing discrimination was not just an economic issue, but also a social one, reinforced by media, societal biases, and even government rhetoric that painted minority communities as undesirable. Predatory lending practices, such as subprime mortgages disproportionately targeting Black and Latino home buyers, contributed to financial instability and higher foreclosure rates in these communities. These loans often came with high interest rates and hidden fees, making homeownership a financial burden rather than a step towards stability. The 2008 financial crisis further widened the racial wealth gap, as Black and Latino homeowners were hit hardest by the collapse of the housing market. Many lost their homes due to foreclosure, erasing decades of economic progress in a matter of months. Today, while legal protections exist, disparities in home ownership rates remain stark. Policies such as exclusionary zoning, high-interest mortgage rates for minority borrowers, and unequal property appraisals continue to reinforce systemic inequalities. The racial wealth gap is one of the main reasons for these disparities, as historical injustices have left many minority families without the generational wealth needed for home ownership. Even with the introduction of government assistance programs, these communities often face difficulties in securing financing or finding affordable housing in safe, resource-rich neighborhoods. This chapter explores the historical trajectory of these issues, highlighting real-life stories of families who have struggled to break through these barriers. We examine the lasting effects of policies that segregated communities and the ongoing fight for equal housing rights. By understanding how the dream of homeownership has been deferred for so many, we can begin to address the policies and practices that have kept it out of reach and work towards solutions that promote equity and fairness in the housing market. Chapter 2. Foundations of Exclusion. The American housing market was not built on a foundation of fairness. Instead, from its inception, it was designed to exclude certain groups, primarily Black Americans, immigrants, and other marginalized communities. The history of housing discrimination is not just a story of exclusion, but of intentional policies that shaped racial and economic inequalities that persist to this day. In the late 19th and early 20th centuries, as cities expanded and the modern real estate market took shape, discriminatory practices became deeply embedded in both private and public policies. White-only deed restrictions, also known as racially restrictive covenants, were legally enforceable agreements that prohibited homeowners from selling or renting to non-whitening buyers. These covenants, enforced by neighborhood associations and backed by courts, ensured that Black families and other minorities were locked out of wealth-building opportunities associated with homeownership. The federal government also played a significant role in fostering exclusion. The establishment of the Federal Housing Administration, FHA, in the 1930s was intended to make homeownership more accessible by providing mortgage insurance and promoting affordable long-term loans. However, FHA policies explicitly favored white buyers while systematically denying loans to Black families. The infamous practice of redlining, where banks and lenders refused to invest in predominantly Black neighborhoods, was based on FHA-sanctioned maps that categorized minority communities as high risk. These discriminatory lending practices resulted in chronic underinvestment, deteriorating infrastructure, and economic stagnation in these neighborhoods. Beyond banking and lending policies, exclusionary zoning laws also played a crucial role in segregating communities. Many suburban areas adopted zoning ordinances that effectively barred low-income and minority families by requiring large minimum lot sizes, banning multifamily housing, or placing restrictions that made homeownership unattainable for those without generational wealth. These zoning policies ensured that minority families were confined to certain areas, reinforcing patterns of racial segregation that persist today. While these policies shaped city landscapes, their consequences extended far beyond the housing market. By forcing Black and minority families into under-resourced neighborhoods, they effectively limited access to quality education, healthcare, and job opportunities. Underfunded schools in these neighborhoods created barriers to upward mobility, while healthcare disparities further exacerbated the wealth and homeownership gaps. In effect, the exclusion from housing opportunities was not just about homes. It was about restricting entire communities from the American dream. The consequences of these exclusionary practices have had far-reaching effects. The inability to own property meant that Black and minority families were denied the primary avenue for building generational wealth. Meanwhile, white families benefited from rising property values, home equity growth, and access to better schools, healthcare, and job opportunities. The racial homeownership gap, first created by these exclusionary policies, continues to affect economic mobility for millions of Americans. Although landmark legislation such as the Fair Housing Act of 1968 aimed to eliminate racial discrimination in housing, the damage had already been done. Many of the neighborhoods that were systematically denied investment continue to struggle with poverty, underfunded schools, and limited economic opportunities. Meanwhile, modern forms of discrimination, such as biased home appraisals and predatory lending, continue to disadvantage Black and minority homeowners. One example of modern housing discrimination can be seen in disparities in home appraisals. Studies have shown that homes owned by Black families are often appraised for significantly less than similar homes in white neighborhoods. This devaluation limits equity growth, making it harder for Black homeowners to build wealth or pass down assets to future generations. Additionally, lenders continue to impose higher interest rates and stricter lending requirements on minority borrowers, reinforcing long-standing financial barriers. This chapter explores the historical and legal framework that built a racially divided housing market, examining how these policies continue to shape economic disparities today. By understanding the foundations of exclusion, we can better address the ongoing challenges in making housing truly fair and accessible for all. Chapter 3: Red Lines, Black Homes. The practice of redlining, which systematically denied Black and other minority communities access to mortgage loans and credit, stands as one of the most damaging policies in American housing history. Emerging in the 1930s, redlining was officially sanctioned by federal agencies like the Homeowners Loan Corporation, HOL. These institutions created color-coded maps that marked Black and minority neighborhoods in red, designating them as high-risk areas for investment. The result was decades of economic isolation, poverty, and neighborhood decline that still impact communities today. Redlining ensured that Black families were largely unable to access the same federally backed home loans that helped white families build wealth through home ownership. While white buyers benefited from low-interest loans and suburban expansion, Black families were often forced into predatory lending agreements, such as contract buying, an exploitative system where buyers paid inflated prices for homes without actually holding legal ownership until the full amount was paid. This meant that missing a single payment could result in immediate eviction, with no legal protections or recourse. The long-term effects of redlining extended beyond mortgage access. Banks and businesses followed the government's lead, refusing to invest in minority neighborhoods, leading to deteriorating housing stock, failing infrastructure, and limited access to essential services like healthcare and grocery stores. Schools in redlined areas suffered from chronic underfunding, reinforcing cycles of poverty and limiting opportunities for upward mobility. By the 1970s, redlining was officially outlawed through measures such as the Fair Housing Act and the Community Reinvestment Act, but its effects persisted. Even without explicit redlining maps, banks continued to discriminate against Black and Latino borrowers through practices like reverse redlining, in which minority buyers were targeted for high-interest, risky loans. In the 2008 housing crisis, Black homeowners were disproportionately affected, with foreclosure rates nearly double those of white homeowners. Many lost their homes and any wealth they had managed to accumulate, setting back entire generations. Today, the legacy of redlining is still visible in the form of racial wealth disparities, concentrated poverty, and continued disinvestment in historically redlined neighborhoods. While efforts like affordable housing initiatives and homebuyer assistance programs aim to correct these injustices, the road to equity remains long. Addressing the lingering effects of redlining requires systemic changes in banking, real estate, and government policy to ensure that Black and minority families have equal access to the wealth-building opportunities that home ownership provides. Chapter 4: The Cost of a Promise Broken. The promise of fair housing has been made time and again, yet for millions of marginalized Americans, that promise remains unfulfilled. Government programs designed to promote home ownership and equal access to housing have often fallen short, either through poor implementation, lack of enforcement, or unintended consequences that further deepened inequality. One of the earliest examples of a failed government effort was the post-World War II GI Bill, which was intended to provide returning veterans with access to education, job training, and home loans. While it helped millions of white veterans secure homes and build wealth, Black veterans were largely excluded. Due to discriminatory lending practices and redlining, many Black servicemen were denied home loans, forcing them to rent in segregated neighborhoods, while their white counterparts bought homes in suburban developments that would later appreciate in value. This disparity contributed significantly to the racial wealth gap that persists today. Another example is the urban renewal program of the mid-20th century, which was supposed to revitalize struggling neighborhoods. Instead, it led to the widespread displacement of Black and minority communities. Dubbed Negro removal by critics, these programs demolished minority neighborhoods in the name of progress, but failed to provide adequate relocation or compensation. Many displaced families were forced into public housing projects that further entrenched cycles of poverty rather than providing a pathway to homeownership. As a result, the very initiatives meant to improve urban communities ended up segregating them further, reinforcing barriers to economic mobility. The Fair Housing Act of 1968 was a landmark piece of legislation meant to end housing discrimination, but enforcement proved weak. Discriminatory practices such as steering, where real estate agents direct buyers to certain neighborhoods based on race, unequal property appraisals, and lending discrimination continued largely unchecked. The federal government lacked the political will and resources to fully enforce the law, allowing housing segregation to persist in more covert ways. While legal protections existed on paper, in practice many Black and minority homebuyers still faced significant obstacles when attempting to secure a mortgage or find a home in a predominantly white neighborhood. More recently, federal programs aimed at increasing minority home ownership, such as subprime lending in the late 1990s and early 2000s, ended in disaster. Many Black and Latino borrowers were given high-risk adjustable-rate mortgages that seemed affordable at first but quickly became unmanageable. When the 2008 financial crisis hit, these homeowners were disproportionately affected, with foreclosure rates nearly double those of white homeowners. Entire neighborhoods that had made modest economic gains were devastated as families lost their homes, wiping out generations of financial progress and deepening economic instability in minority communities. The very programs meant to help often ended up doing more harm than good. Even today, affordable housing initiatives struggle to bridge the gap. Government-subsidized housing vouchers, for example, are often rejected by landlords, either due to explicit bias or because of bureaucratic hurdles that make renting to voucher holders less appealing. First-time homebuyer assistance programs are frequently underfunded or have strict eligibility requirements that make them inaccessible to those who need them most. Additionally, the rising costs of housing in urban centers, driven by real estate speculation, gentrification, and corporate landlords, make it nearly impossible for lower-input families to achieve home ownership, even with government support. The cycle of broken promises continues, leaving many families trapped in a system that was never designed for them to succeed. For every promise made, there have been structural barriers preventing real change. Whether through financial exclusion, ineffective policies, or outright discrimination, fair housing remains an unfulfilled dream for many. This chapter delves into the history of failed housing policies, the structural weaknesses that allowed them to be exploited, and the ongoing challenges in holding institutions accountable. If the promise of fair housing is ever to be fulfilled, there must be stronger enforcement, more inclusive policies, and a commitment to addressing past injustices with real, tangible action. Chapter 5: Paper Barriers, Real Walls. For many aspiring homeowners, the obstacles to buying a home are not just financial but bureaucratic. A web of policies, legal loopholes, and administrative red tape often serves as an invisible wall that prevents equitable access to home ownership. These paper barriers disproportionately impact marginalized communities, making it harder for them to secure mortgages, qualify for financial assistance, or even navigate the complexities of the real estate market. One of the most significant barriers is credit scoring. The modern credit system, established to assess an individual's ability to repay loans, has long been criticized for reinforcing racial and economic inequalities. Many Black and Latino households have lower credit scores, not because they are financially irresponsible, but because of historical exclusion from traditional banking services. Without access to mainstream financial institutions, many were forced to rely on alternative lending sources, such as payday loans, which do not positively impact credit scores. Additionally, rent and utility payments, regular expenses that demonstrate financial responsibility, are often not factored into credit scores, putting renters at a disadvantage when trying to secure a mortgage. Another barrier is the complexity of homeownership assistance programs. While there are government programs designed to help first-time buyers, many of them come with strict eligibility requirements, burdensome paperwork, and long waiting lists. For example, income limits can be so restrictive that even moderate-income families are excluded, while the amount of assistance provided is often insufficient to cover rising home prices. Furthermore, down payment assistance programs may require extensive documentation, including proof of employment stability, bank statements, and tax records, making them difficult for self-employed individuals or those with irregular incomes to access. Zoning laws and restrictive covenants also create obstacles to home ownership, especially in historically segregated areas. Many suburban communities have zoning laws that require single-family homes on large lots, effectively pricing out lower-income buyers and reinforcing racial and economic segregation. Some communities still have old property deeds with racial covenants, though legally unenforceable, that reflect a long history of exclusionary practices. These legal remnants contribute to an ongoing culture of exclusivity that makes homeownership less accessible to marginalized groups. The mortgage approval process itself is another area where paper barriers create real-world consequences. Lenders often require extensive documentation, and even minor discrepancies in paperwork can lead to delays or denials. Black and Latino borrowers are more likely to be denied mortgages even when they have similar financial profiles as white applicants. Studies have shown that loan officers, whether consciously or unconsciously, apply stricter scrutiny to minority borrowers, often citing vague concerns about financial stability. Moreover, many low-income and minority buyers lack access to legal and financial resources that could help them navigate these barriers. Real estate contracts, closing costs, and legal jargon can be overwhelming, particularly for first-time buyers. Without guidance, many potential homeowners either fall victim to predatory practices or become discouraged and abandon their efforts to purchase a home altogether. Ultimately, these bureaucratic and systemic obstacles reinforce housing inequality, ensuring that home ownership remains out of reach for many who deserve a fair chance. Addressing these issues requires reforms, such as alternative credit scoring models that consider rental and utility payments, streamlining homebuyer assistance programs, and enforcing fair lending practices. Until these changes are made, the so-called paper barriers will continue to act as very real walls, keeping millions from achieving the dream of homeownership. The hidden policies and bureaucratic hurdles that prevent equitable access to home ownership. Chapter 6: The Weight of Wealth Gaps. The racial wealth gap is one of the most significant factors influencing homeownership rates in the United States. Wealth is not just about income, it is about accumulated assets, generational advantages, and the ability to withstand financial shocks. For Black, Latino, and other marginalized communities, historical injustices have left them with significantly less inherited wealth compared to white families, making it much harder to buy and keep a home. The origins of the racial wealth gap can be traced back to centuries of systemic exclusion, from slavery and Jim Crow laws to redlining and predatory lending. The New Deal-era housing policies that created America's suburban middle class largely excluded Black families. While white families were given access to affordable mortgages and government-backed loans, Black families were often denied those same opportunities, forcing them into rental markets or subprime loans that carried higher risks and interest rates. Even when Black families managed to buy homes, discriminatory practices made it difficult to build generational wealth. Homes in Black neighborhoods were consistently undervalued compared to those in white neighborhoods, leading to lower property appreciation rates. This meant that while white families saw their wealth grow through home equity, Black homeowners were left with much smaller returns on their investments. This disparity continues today, as studies show that homes in predominantly Black neighborhoods are appraised at significantly lower values than comparable homes in white neighborhoods. The racial wealth gap also affects the ability to save for a down payment. White families are more likely to receive financial assistance from their parents or relatives when purchasing a home, a privilege that many Black and Latino families do not have. Without generational wealth to rely on, prospective minority homebuyers often have to delay purchasing a home, take on riskier loans, or settle for homes in less desirable areas with fewer resources and opportunities. Once a home is purchased, the financial burden does not end. Home maintenance, property taxes, and unexpected repairs require ongoing financial stability. Because of the racial wealth gap, Black and Latino homeowners are more vulnerable to foreclosure during economic downturns. The 2008 financial crisis disproportionately impacted minority homeowners, many of whom had been targeted with subprime mortgages. As a result, Black home ownership rates plummeted, while white home ownership rebounded more quickly, widening the wealth gap even further. Addressing the racial wealth gap requires systemic change. Policies that promote fair home appraisals, equitable lending practices, and increased access to first-time homebuyer assistance programs are essential. Additionally, reparative measures, such as down payment assistance, specifically for historically marginalized communities, could help level the playing field. Without action, the racial wealth gap will continue to serve as an insurmountable barrier to home ownership, keeping millions of families from achieving financial stability and security. how the racial wealth gap affects the ability to buy and keep a home. Chapter 7. Loans denied, futures stolen. The dream of home ownership often begins with a mortgage application, but for many marginalized communities, that dream is often crushed before it even begins. The history of banking discrimination and predatory lending practices has played a significant role in deepening housing inequality, making it difficult for Black, Latino, and low-income families to secure loans and build wealth through home ownership. For decades, banks engaged in redlining, refusing to lend in minority neighborhoods and labeling them as high risk, regardless of the financial stability of individual borrowers. This practice, which was supported by federal policies well into the 20th century, prevented countless Black families from buying homes in growing suburban areas. Even after redlining was officially banned, discrimination persisted in subtler ways. Minority applicants were often given higher interest rates, stricter loan conditions, or were outright denied mortgages compared to white applicants with similar financial profiles. In the late 20th and early 21st centuries, the rise of subprime lending created a new layer of financial exploitation. Lenders aggressively targeted Black and Latino borrowers with high-interest, adjustable-rate mortgages, even when they qualified for better loan options. These predatory practices led to higher default rates, and, when the 2008 housing crisis hit, minority homeowners were disproportionately affected by foreclosures. Many families lost their homes and life savings, erasing generations of financial progress in a matter of months. Even today, disparities persist. Studies show that Black and Latino applicants are still more likely to be denied conventional home loans, even when they have strong credit and stable incomes. Lending algorithms, which claim to be neutral, often reinforce existing biases because they rely on historical data that reflects decades of discrimination. Meanwhile, alternative home financing options, such as rent-to-own agreements and contract-for-deed sales, often come with exploitative terms that leave buyers with little legal protection and no equity. These systemic barriers have long-term consequences. Homeownership is one of the most effective ways to build intergenerational wealth, yet discriminatory lending practices have kept this opportunity out of reach for many. Without access to fair loans, entire communities remain locked in cycles of renting, unable to benefit from the financial stability and wealth accumulation that come with owning a home. Addressing this issue requires policy reforms, stronger consumer protections, and proactive efforts to eliminate bias in lending. Expanding access to credit, strengthening fair lending laws, and holding financial institutions accountable are essential steps in ensuring that every aspiring homeowner has a fair chance at securing a loan and securing their future. The role of banking discrimination and predatory lending in housing inequality. Chapter 8. Gentrification and displacement. For decades, cities across the United States have undergone rapid transformations. What were once predominantly working-class and minority neighborhoods are now filled with high-rising apartments, boutique coffee shops, and luxury developments. This process, known as gentrification, has led to rising property values, changing community dynamics, and, most importantly, the displacement of long-term residents who can no longer afford to live in the neighborhoods they have called home for generations. Gentrification is often framed as a sign of economic progress, bringing in investment and revitalizing urban areas that were previously neglected. However, This progress frequently comes at the expense of those who lived in these communities long before developers and wealthier newcomers arrived. As property values increase, so do rents and property taxes, pushing out lower-income families, many of whom are Black, Latino, or immigrant communities. One of the major drivers of gentrification is speculative real estate investment. Investors purchase properties in historically undervalued neighborhoods, renovate them, and sell or rent them at significantly higher prices. While this process increases the area's property values, it also results in skyrocketing rent prices that are unaffordable for long-term residents. In some cases, landlords force out tenants by refusing to renew leases, increasing rents beyond reasonable limits, or using legal loopholes to evict residents. Another factor contributing to displacement is the influx of wealthier individuals moving into historically working-class neighborhoods. Young professionals and higher wage earners are drawn to urban centers for job opportunities, cultural attractions, and convenient transportation options. As demand for housing increases, developers prioritize luxury housing over affordable units, leading to a reduction in available housing for lower-wage residents. This shift fundamentally alters the social fabric of these neighborhoods, replacing small, family-owned businesses with corporate chains and erasing the cultural identity of the area. The consequences of displacement are severe. Families who are forced to leave their communities often struggle to find affordable housing elsewhere, sometimes having to move to areas with fewer job opportunities, lower quality schools, and inadequate public services. The emotional and psychological toll of being uprooted from one's home and community can be devastating, particularly for elderly residents and children. Additionally, gentrification exacerbates racial and economic segregation, as displaced families are pushed to the outskirts of cities, away from resources and opportunities. Efforts to combat displacement and create more equitable urban development include policies such as rent control, affordable housing mandates, and community land trusts. Some cities have introduced tenant protections, ensuring that landlords cannot arbitrarily evict tenants or drastically increase rents without justification. Others have pushed for inclusionary zoning laws, requiring new developments to include a percentage of affordable housing units. However, these measures often face resistance from developers and politicians who prioritize economic growth over community stability. Gentrification is not inherently negative. It can bring much-needed investment into struggling neighborhoods. However, without safeguards in place, it can also lead to devastating displacement. The challenge lies in finding a balance between urban development and community preservation, ensuring that long-term residents are not pushed out in the name of progress. Addressing gentrification requires a commitment to housing justice, equitable policies, and an understanding that communities are more than just real estate. They are homes, histories, and the foundation of people's lives. The cycle of rising property values pushing long-term residents out of their communities. Chapter 9. The Price of Address. In America, where you live determines much more than just your home. It shapes your opportunities, education, healthcare, and even your lifespan. Zip codes are more than just numbers. They serve as invisible boundaries that dictate access to resources and economic mobility. The disparities between neighborhoods can be so extreme that moving just a few miles can mean the difference between opportunity and systemic disadvantage. The roots of these disparities lie in historical housing policies that segregated communities by race and income. Redlining, discriminatory zoning laws, and uneven investment in infrastructure have created stark divisions between neighborhoods. Affluent communities often enjoy well-funded schools, lower crime rates, better healthcare facilities, and access to high-paying jobs, while low-income and minority neighborhoods frequently face underfunded schools, food deserts, higher crime rates, and environmental hazards. Education is one of the most striking examples of how zip codes dictate opportunity. Public schools are primarily funded through local property taxes, meaning that wealthier neighborhoods with higher property values can afford better schools, while lower-income areas struggle with outdated textbooks, overcrowded classrooms, and fewer extracurricular programs. This creates a cycle where children from disadvantaged neighborhoods start at a systemic disadvantage, limiting their future earning potential and perpetuating generational poverty. Healthcare access is another key issue tied to location. Low-income neighborhoods are more likely to have fewer hospitals, clinics, and specialized medical services, leading to higher rates of preventable illnesses and lower life expectancy. Meanwhile, wealthier areas often have better healthcare facilities, lower pollution levels, and healthier food options, contributing to overall better health outcomes. Economic mobility is also heavily influenced by where someone lives. Transportation access, job opportunities, and community resources all play a role in determining an individual's ability to succeed. Many low-income communities suffer from inadequate public transit, making it harder for residents to commute to well-paying jobs. Additionally, businesses and industries are more likely to invest in already affluent areas, further deepening the economic divide. Addressing these disparities requires intentional policy changes, such as increasing investments in historically neglected neighborhoods, implementing equitable school funding models, expanding public transit, and enforcing fair housing laws to prevent discriminatory lending and renting practices. Zip codes should not be destiny. Every community deserves access to resources and opportunities that allow its residents to thrive. Without systemic reforms, the cycle of economic and racial segregation will continue, limiting the potential of millions of people simply because of where they were born or can afford to live. How zip codes determine access to resources, education, and opportunity. Chapter 10. Fighting for a key. Owning a home is often seen as the cornerstone of the American dream. Yet for many, that dream is systematically denied. Housing discrimination is not just a relic of the past. It remains an ongoing struggle for countless individuals and families who are unfairly locked out of home ownership opportunities due to their race, income, or background. Take the story of Maria and Luis, a hard-working Latino couple who spent years saving for a down payment. Despite having steady incomes and good credit, they were repeatedly denied mortgages or given high-interest loan options that seemed designed to set them up for failure. When they finally found a lender willing to work with them, the appraisal on their prospective home came in suspiciously low. Only after a white friend posed as the homeowner for a second appraisal did they receive a fair valuation, exposing the persistent racial bias in home appraisals. For many Black families, the barriers are just as steep. James, a father of two, applied for an apartment in a newly developed building in his city. Despite meeting all the financial requirements, he was told there were no available units, only to later discover that white applicants were being accepted with fewer qualifications. This kind of discrimination, though illegal, remains widespread and difficult to prove. leaving families like James with little recourse. Then there's Aisha, a single mother who was forced to move multiple times due to landlords who took advantage of legal loopholes to push out long-term tenants. In rapidly gentrifying areas, landlords often refuse to renew leases or dramatically raise rents to force out lower-imprint residents, making stability nearly impossible to achieve. Aisha's story is not unique. It reflects a broader pattern of displacement that disproportionately affects communities of color. These stories highlight the insidious ways in which discrimination persists in housing. From unfair lending practices to biased appraisals and rental discrimination, many aspiring homeowners face an uphill battle. While fair housing laws exist, enforcement is often weak, and proving discrimination can be difficult. The fight for a key, the simple right to a stable home, continues. Organizations, activists, and legal advocates work tirelessly to expose discriminatory practices and push for reforms. But until systemic barriers are dismantled, the dream of homeownership will remain out of reach for too many, turning what should be an opportunity for security and wealth building into a constant battle for fairness. Stories of individuals and families struggling to overcome housing discrimination. Chapter 11. Policy, Power, and Prejudice. Government policies have long played a decisive role in shaping home ownership opportunities in America. From redlining and racially restrictive covenants to exclusionary zoning and predatory lending, the housing system has been influenced by laws that have systematically advantaged some while disadvantaging others. Understanding these policies is crucial to dismantling the barriers that keep marginalized communities from achieving homeownership. Historically, the federal government actively participated in housing discrimination. The National Housing Act of 1934, which created the Federal Housing Administration (FHA), institutionalized redlining by refusing to insure mortgages in Black and immigrant neighborhoods. Meanwhile, the GI Bill, which helped millions of World War II veterans purchase homes, largely excluded Black veterans due to local-level discrimination by banks and real estate agents. These policies shaped the racial wealth gap by ensuring that white families had access to affordable homeownership, while Black and Latino families were systematically excluded. Even after the passage of the Fair Housing Act in 1968, which outlawed housing discrimination, many of these practices persisted in subtler forms. Exclusionary zoning laws, for example, were used to keep affordable housing out of wealthy, predominantly white suburbs. By requiring large lot sizes and banning multifamily units, these laws made it nearly impossible for low-impossible families to move into well-resourced communities. This maintained racial and economic segregation, keeping wealth and opportunity concentrated in select areas. Another modern policy challenge is predatory lending. In the 1990s and early 2000s, banks aggressively pushed subprime loans, high-interest mortgages with risky terms, on Black and Latino borrowers, even when they qualified for better loan products. When the housing market crashed in 2008, these communities were disproportionately affected, losing homes and generational wealth in the process. Despite regulations like the Dodd-Frank Act, which sought to curb exploitative lending, disparities in mortgage approvals and interest rates persist today. Additionally, government-backed affordable housing programs often fail to serve those who need them most. The Housing Choice Voucher Program, commonly known as Section 8, is plagued by long waitlists and landlord discrimination. Similarly, First-time home buyer assistance programs frequently have eligibility requirements that exclude many low-income families, further limiting access to home ownership. Reforming these policies is essential for achieving housing equity. Strengthening fair housing laws, increasing investments in affordable housing, and enforcing anti-discrimination measures are necessary steps. Policymakers must also address zoning laws, ensure equitable lending practices, and expand homebuyer assistance programs that truly serve marginalized communities. The fight for fair housing is not just about correcting past injustices. It's about ensuring a future where everyone has an equal opportunity to own a home and build wealth. Without meaningful policy change, the cycle of exclusion will continue, keeping the dream of home ownership out of reach for millions. A look at government policies that shape home ownership opportunities, or lack thereof. Chapter 12: The Struggle for Stability. For many Americans, home ownership represents more than just a place to live. It's a symbol of stability, security, and financial growth. However, despite legal protections like the Fair Housing Act, millions of people still struggle to find and maintain a stable home due to systemic barriers, economic instability, and ongoing discrimination. One of the biggest challenges to home ownership is affordability. In many cities, the cost of buying a home has skyrocketed, while wages have failed to keep pace. For middle and low-income families, saving for a down payment while covering rent, childcare, healthcare, and other expenses can feel impossible. Housing shortages, driven by restrictive zoning laws and slow construction, have only exacerbated the problem, pushing home prices higher and making competition fierce. Another major barrier is access to credit. Mortgage lending practices continue to disproportionately disadvantage communities of color. Despite having similar financial qualifications, Black and Latino applicants are more likely to be denied home loans or charged higher interest rates than their white counterparts. This persistent lending bias, combined with lower average household wealth due to historical discrimination, makes it much harder for marginalized groups to enter the housing market. Even for those who manage to buy a home, maintaining stability can be a challenge. Property taxes, home repairs, and unexpected financial setbacks can quickly turn homeownership from a source of security into a financial burden. Predatory practices, such as contract for deed arrangements and high-interest refinancing schemes, continue to target vulnerable homeowners, putting them at risk of foreclosure. Renters also face significant obstacles to stability. With homeownership out of reach for many, renting has become the only option, but rising rents, eviction threats, and a lack of tenant protections make it difficult for families to put down roots. Evictions disproportionately affect low-income and minority renters, often leading to cycles of housing insecurity and financial hardship. The COVID-19 pandemic further exposed these vulnerabilities, as millions of families faced eviction, despite emergency housing assistance programs. Legal protections exist, but enforcement is inconsistent. Many tenants and prospective homeowners lack the resources or knowledge to fight back against discrimination, unfair lending practices, or unlawful evictions. Advocacy groups and legal aid organizations work to bridge this gap, but without stronger enforcement and policy changes, stability will remain elusive for many. Addressing these challenges requires a multifaceted approach, expanding affordable housing initiatives, reforming lending practices, strengthening tenant protections, and increasing government investment in housing equity programs are all crucial steps. Stability in housing should not be a privilege, it should be a right accessible to all. Why home ownership remains out of reach for many despite legal protections. Chapter 13. A legacy of locked doors. The impact of housing discrimination is not just a momentary injustice. It echoes across generations, shaping the financial stability, opportunities, and futures of entire families. For Black, Latino, and other marginalized communities, the long history of redlining, predatory lending, and exclusionary housing policies has created a lasting legacy of locked doors, barriers to wealth accumulation, homeownership, and economic mobility. Homeownership has historically been one of the most powerful tools for building generational wealth in the United States. Families who were able to purchase homes decades ago benefited from rising property values, which allowed them to pass down assets, fund education, and provide financial security for future generations. However, discriminatory policies systematically shut many communities of color out of this wealth-building opportunity, forcing them into unstable housing situations with limited financial benefits. The racial wealth gap is a direct consequence of these practices. Studies show that the average white family holds nearly 10 times the wealth of the average Black family, and a significant portion of that disparity is rooted in home ownership. While many white families were able to buy homes at low interest rates with government-backed loans after World War II, Black families were often denied access to these programs, forcing them into predatory lending arrangements that left them vulnerable to foreclosure and financial loss. Even today, the consequences of past discrimination linger. Many Black and Latino families still struggle to secure home loans, face higher interest rates, and receive lower home appraisals compared to white homeowners. Neighborhoods that were once redlined continue to experience disinvestment, with lower property values, underfunded schools, and limited access to essential services. This cycle perpetuates itself, making it difficult for younger generations to break free from systemic economic disadvantages. Despite these challenges, communities have fought back. Grassroots organizations, legal advocacy groups, and financial literacy initiatives are working to close the racial wealth gap and expand homeownership opportunities for historically marginalized groups. Programs that provide down payment assistance, affordable housing developments, and fair lending reforms are crucial in dismantling the barriers that have persisted for decades. Understanding this legacy is the first step toward meaningful change. Recognizing how past policies continue to shape present realities allows us to push for solutions that create a fairer and more equitable housing system, one where doors are open to all, not just a privileged few. Generational effects of housing discrimination and what it means for future homeowners. Chapter 14. Breaking the Cycle. For generations, systemic barriers have kept marginalized communities from accessing the benefits of home ownership. But across the country, activists, policymakers, and organizations are working tirelessly to break the cycle of housing inequality. By addressing discriminatory lending practices, advocating for affordable housing, and empowering individuals through financial education, these movements are reshaping the landscape of home ownership and ensuring that future generations have a fairer chance at stability. One of the most significant efforts to combat housing discrimination is the push for stronger enforcement of fair housing laws. While the Fair Housing Act of 1968 was a landmark piece of legislation, enforcement has been inconsistent, allowing discriminatory practices to persist. Civil rights organizations and legal advocacy groups have taken a proactive stance, challenging unfair lending practices, racial bias in appraisals, and exclusionary zoning laws that keep lower-income families out of wealthier neighborhoods. These legal battles are crucial in holding institutions accountable and pushing for systemic change. Another key initiative is expanding access to affordable housing. Many cities and states have begun implementing inclusionary zoning policies, which require new housing developments to include a percentage of affordable units. Additionally, community land trusts and cooperative housing models have gained traction as sustainable solutions for long-term housing affordability. These approaches ensure that lower-income families have access to stable housing without the fear of being priced out by gentrification or market speculation. Financial literacy and home ownership education programs also play a vital role in breaking the cycle. Many prospective home buyers, particularly those from historically disadvantaged backgrounds, face challenges navigating the complex mortgage process. Non-profit organizations and local government programs are stepping in to provide workshops on credit building, mortgage options, and financial planning. By equipping individuals with knowledge, these initiatives help bridge the gap between renters and homeowners, empowering families to make informed decisions about their financial future. Technology and innovation are also changing the way people access housing opportunities. Digital platforms are increasing transparency in home lending, reducing bias in appraisals, and providing alternative credit scoring models that take into account rent and utility payment histories. These advancements help level the playing field, making homeownership more attainable for those who have been historically excluded from traditional lending systems. Breaking the cycle of housing discrimination requires a collective effort. Policymakers must prioritize equity-driven housing reforms. Financial institutions must commit to fair lending practices, and communities must continue advocating for inclusive policies. While progress has been made, the fight for housing justice is far from over. By continuing to push for change, we can move closer to a future where homeownership is a right, not a privilege reserved for a select few. Initiatives and movements working to create fairer housing opportunity. Chapter 15. The Road to Equity. Creating a truly equitable housing system requires a multifaceted approach that addresses past injustices while building a future rooted in fairness, accessibility, and opportunity. The path to housing equity is complex, but with the right policies, investments, and community-driven initiatives, progress is possible. One of the most critical solutions is expanding access to fair lending. While laws like the Equal Credit Opportunity Act aim to prevent discrimination, disparities in mortgage approvals and interest rates persist. Financial institutions must adopt more inclusive lending practices, such as alternative credit scoring models that consider rental and utility payments, which can help historically underserved borrowers access homeownership opportunities. Additionally, increased funding for down payment assistance programs can bridge the wealth gap and give first-time buyers a chance to build generational wealth. Another essential component is increasing the supply of affordable housing. Government investments in housing infrastructure, tax incentives for developers to build low-cost housing, and zoning reforms that allow for more diverse housing types can help make homeownership attainable for a broader population. Local governments can also promote community land trusts, which ensure long-term affordability by keeping homes in shared ownership models that prevent speculative price increases. Education and outreach are also vital. Many potential homeowners lack knowledge about their rights, mortgage options, and financial planning strategies. Expanding homebuyer education programs, particularly in marginalized communities, can empower individuals to make informed decisions. Nonprofits and advocacy groups are already working to provide financial literacy resources, but more widespread efforts are needed to ensure that prospective buyers are well equipped to navigate the housing market. Addressing systemic housing discrimination also requires stronger enforcement of existing laws. The Fair Housing Act prohibits discrimination, but without rigorous oversight and accountability, violations continue. Government agencies must be more proactive in investigating complaints, penalizing discriminatory lenders, and ensuring that real estate practices promote inclusivity rather than exclusion. Finally, fostering community-driven solutions can make a lasting impact. Grassroots organizations, tenant unions, and local housing cooperatives are essential players in advocating for policy changes, protecting renters' rights, and pushing for reinvestment in historically marginalized neighborhoods. By amplifying the voices of those most affected by housing inequities, these movements help shape policies that reflect the needs of the broader community. The road to equity is long, but it is not impossible. By embracing innovative solutions, holding institutions accountable, and prioritizing policies that foster fairness, we can work toward a future where home ownership is truly accessible to all, regardless of race, income, or background. Exploring solutions for a more inclusive and just housing system.